Hey everyone, checking in on XLK, Apple, and Facebook on the daily and weekly time frame. So the tech sector bulls are continuing strong. We had the gap up open today on the back of Yellen. That's a funny image. On the back of Yellen, pre-market at 8:30 a.m., giving her talk, and the market really responded well. SPY made its bull break of the tightening pattern, and the tech sector followed along. So we've been looking for a lower high pattern to play out here. We still have our resistance to be watching. Tomorrow it's going to be tested 56.72. We've seen a very significant bounce from the low back to where we are right now. And if the bulls break this lower high pattern, that obviously just asserts their dominance in the short term. I would be very surprised if the bulls could pull that off. We did just see, individual names with the same pattern. Semiconductor NVDA just had the same exact daily pattern, and it did break bullish without any consolidation. So that was very impressive. So it is possible, but just looking for that key resistance and knowing that we need to consolidate in the short term. That doesn't mean I'm playing bearish. I would never play against these bulls right now because they're not showing any weakness. We would have to see weakness, but because the market did break bullish from the tightening pattern on SPY that we've been watching, I'm going to anticipate normal healthy consolidation when it does come before continuation to the upside. So at this point, entering bullish positions has really high risk and really low reward in the short term because of the significance of the move we've seen to the upside. Once we get that normal healthy consolidation and cool things off, that risk to reward, just think of it on a spectrum. The dot on the spectrum will shift back towards reward the more we consolidate in the short term, as long as it is normal and healthy, as we are anticipating because the market bulls are in full control. So the weekly time frame for XLK was a bullish reversal doji off the middle Bollinger Band last week, and we're doing a good job of confirming it this week. And it's just a question of, can we break the lower high pattern this week, or do we need to consolidate a little bit before eventually breaking that lower high pattern? Apple is weak. It's the weakest tech name of the big five that we follow, and that is very clear. As we had today, it was the only red tech name on my screen for a while, and then when all the other names were going over 1% to over 2% to the upside, Apple was sitting at about 0.3% when I was looking at all those other names. So I would not be looking to play Apple bullish. There is a strategy to play the laggards that absolutely works often, but Apple's weakness has been prolonged over a couple of months, and we see this time and time again, and there's just this invisible barrier that is keeping the bulls from participating with the rest of the market. And I don't want my money stagnant trying to see that play when you have names like Netflix and Amazon just exploding to the upside. We've got our lead bull, Facebook, blue sky breakout. I would, every day of the week, rather be in a blue sky breakout name with no resistance rather than a name that's a clear stick in the mud in terms of the tech sector. So we are still in a tightening pattern of higher lows and lower highs. I'm watching resistance of 148.28 and watching support of 142.28 and 142.41. So the bulls are still holding on just fine. They're just not seeing any upside momentum to get those nice gains that the rest of the tech sector is enjoying. So the weekly time frame is still rejecting from the exponential resistance. We still have to regain the middle Bollinger Band, and we have to turn things around. This is the weakest weekly chart of those tech sector names, which is another reason why those other names are better to play in my opinion. Facebook, we knew was the strongest because it was coming off of its all-time high. We maintained higher lows and higher highs, and once this bounce initiated in the tech sector, it was positioned the best to be ready to go for this all-time high, which is now following through in a beautiful way. So it closes up near the highs 4 days in a row. Obviously, we need to be careful up at these levels because we are extended to the upside, even though we are in blue sky breakout. And if you are in a position, there's certainly no reason to sell just yet. I would likely be looking to exit tomorrow personally. But in terms of entering a bullish position, definitely want to see consolidation first. The upper Bollinger Band will be support on the daily time frame initially on consolidation. The weekly time frame, upper Bollinger Band resistance, look at this level. All-time high rejected in September. All-time high in January rejected. All-time high in April and May rejected. And here we are right at that level. It's going to be tested tomorrow at the mid-159s. So that would be a likely place to begin to see some consolidation taking place. So keeping in mind, consolidation will be normal and healthy, keeping the bulls in full control of the trend and anticipating that Facebook bulls are going to stay our lead tech bulls for the foreseeable future. Amazon is right behind it, looking for new all-time highs in the fairly near future as well. And we'll check back in tomorrow to see how this plays out. XLK, all about that lower high pattern. Tomorrow will be a very interesting day related to 56.72 resistance. Appreciate you watching. Have a great night.